Welcome to Crypto Simulation Theory. Tonight, I want to provide you with some important perspective on the market. A lot of people are tuned out right now, but since you're watching this video, you're one of the few who's tuned in. And I want to reassure you that we are in good hands with the market, even if it seems like everything is falling apart right in front of you. Yes, it's been a good Monday, and who knows what Tuesday is going to bring, but there's a lot to look forward to this year. I mean, there's a few months left with regards to crypto, and I've been one of the most bullish people during this time where everybody else is kind of calling for the end of the market, a recession, a bear market, and I just don't think we're there yet. And so I want to provide you with kind of a walkthrough behind my reasoning to show you that the period we're in right now is actually a lot more like the 2019 to 2020 lull than it is like a 2018 drawdown or a 2022 bear market drawdown. I'm going to approach this from a few different perspectives. We're going to approach it from kind of a cycle theory perspective. We'll look at some metrics and then get into some technical analysis to close this out. And hopefully by the end of this, video, you'll realize why I'm titling this the loading zone and not, a bear market dump or anything like that. I've been very bullish, but I will continue to provide you reasons why I'm still bullish for quarter 4 of this year. So let's jump right in. So this is Harris Ebrat's Twitter, and Harris is a respected analyst in the space. He is the founder of Trade Campus Academy, and he and I have had some talks recently about things, and I really enjoy his perspective on the market that he shared on his Twitter yesterday. So I want to just kind of go through this with you so you can really understand how Bitcoin have consistently followed more or less a 4-year cycle of global liquidity. And for those of you who don't know, and I'm not going to like go through this in like a lot of detail because I have a lot of things I want to show you, but the M2 index measures the total readily available money from China, US, Europe, Japan, UK, etc., all converted or denominated in US dollars. So there are 4 phases of the Bitcoin cycle that correlate directly to the M2 global liquidity cycle. Number 1, consolidation phase timed with a breakout in the money cycle. Number 2, the bull market rally. Number 3, bear market phase. And number 4, the Bitcoin price recovery phase. This has happened every single time, and I don't think this time is any different. Which phase do you think we're in right now? Do you think we're in the bear market phase, or do you think that we're in the consolidation phase? So if you look at what happened in past cycles and compare it to now, you can see, like, for instance, I'm just deciding if I want to go through all that. Well, yeah, we'll go through it. So in 2013, there was a consolidation phase as the M2 global liquidity broke out to a new all-time high, which a few months after all kicked off the first Bitcoin bull market, but like the first true one, if you don't count the 2011 one. After peaking in early 2014, the market entered a bear market in line with decline in M2 liquidity. Once M2 bottomed out and started rising again, Bitcoin enters its price recovery phase, which was followed by another consolidation phase, which occurred during most of 2016 and 2015. And then Bitcoin broke to new highs in 2017 bull run. And after that bull run, there was another bear market, perfectly aligned with a decline in M2 global liquidity. And in late 2018, as global liquidity bottomed out and began rising, Bitcoin entered price recovery phase, and we saw that secondary bull market that took Bitcoin almost 14,000. Late 2019 or early 2020, there was a prolonged consolidation phase, and then of course we had the COVID Black Swan event. But as M2 hit new highs, then we had the 2021 bull run. Where are we now? So after 2021, we had a bear market in 2022, followed by another price recovery phase, and it seems like we are now again in a consolidation phase. So phase 4, which is the much anticipated bull rally, has yet to materialize. So the biggest unanswered questions are, well, how long are we going to stay in consolidation, and will we see the fourth bull rally as we did during the previous cycle? Okay, and that is the question, right? So what do you think? And that's what we're going to kind of answer. Let's blow up this chart real quick that he made. It's a little hard to see on here, but you can see these different sideways consolidation phases and how long they've lasted in the past. Note that the one in 2018 to 2019, or 2019 to 2020 was particularly long. This one has also been kind of long, and this is the global liquidity, right? We've had breakout, 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 and yet another breakout. So I actually imagine that we are, most likely getting pretty close to entering in to the bull market phase of this cycle sometime within the next few months. So I think that this accumulation phase, or consolidation phase, as Harris calls it, is coming to an end relatively soon. So another thing that I noticed is I ran a report on the number of active addresses for Bitcoin. I took a 7-day moving average of it, and you can see that in the past, like ever since, like really before 2022, before that bear market, we had a kind of a brief spike in 2023, but we haven't seen that run up that we usually see in a bull market. If anything, we've seen a drawdown by quite a bit. So number of active addresses is actually nearing all-time, not all-time low, but like lows not seen in, we'll just say, about 6 years. So you can almost think of drawing like a horizontal line through this data. And so that is definitely suggesting that we are probably nearing some kind of bottom for Bitcoin active addresses. Again, this is a 7-day simple moving average. It's just been moving straight down, and we've seen this happen. We saw this happen from the 2017 bull peak down to the depths of the bear market, and then we saw another decline that lasted for quite a little while before we saw another spike back up. So you could say that we're probably in the bottoming process in terms of the active addresses, and so that's another thing that's got me feeling kind of bullish, because these low levels are typically what you'll see right before a major pump comes. And although I didn't post this in my Twitter, I also wanted to show you um, ETF outflows and inflows. So if you look here, you'll see this is a 7-day SMA that I've taken of US Bitcoin spot ETF flows. And you can, early in the year, we had a lot of inflows, and they were definitely outpacing the outflows. But, then we saw a little bump in the early summer, another little bump here. But really, if you zoom out, it just kind of looks like one big consolidation that's taken place. Really, I would say after kind of the March highs, it's just been in this like long-term consolidation phase. It certainly doesn't seem like ETFs are just spilling out and bleeding all over the place. I mean, sorry for all the little tabs here, but if you look at Bitcoin spot ETF balances, you can see that they just have been in kind of a steady decline, but really it looks like more of an accumulation phase to me than it does to a complete like dumpage or anything like that. Okay, and I also found this report from Glassnode to be very interesting and insightful. So current market pressures, I'm going to make this a little bigger for you. With downward price pressure increasing, it becomes prudent to assess the unrealized loss held by investors to evaluate the financial stress they are experiencing. And so, one thing that is sort of important to realize is that from the perspective of the broader market, unrealized losses are actually at historic lows, despite the drawdown. Despite the drawdown, just amounts to 2.9% of Bitcoin's market cap, which says that the aggregate investor is relatively profitable even in the face of continued price declines. And the drawdowns we've experienced this cycle have actually been pretty mild compared to the drawdowns that we've experienced in past cycles. And some of that's just, owed to the fact of a maturing asset class with ETF now and institutional investment. You're just not gonna see that downside volatility be anything like it was in the past, except for maybe black swans. So here's a graph of the Bitcoin relative unrealized loss, and you can see just how small it is. It truly is small at historic lows. So if we take the ratio between total unrealized profit and unrealized loss, we can see that the profits are 6 times larger than the losses. 6 times larger. Okay. So this is nothing to sneeze at. I mean, this is just showing you how healthy our market actually is, despite how it may feel. So the only area of concern, but this is always an area of a concern in a consolidation zone, like we're very likely in right now, is that the short-term holders are in a little bit of trouble. But it even says that the magnitude of even short-term unrealized losses, short-term holders unrealized losses, is not anywhere near full-scale bear market territory. As you can see, it's elevated, but it's just nothing like what you see during bear market drawdowns, right? So. Yeah, so like above, this is an assessment of the, over down here, I should say, of the short-term holder MVRV, market value to realized value ratio. This did go below the value of 1.0, and they said this metric is actually at similar levels to August 2023 during the recovery rally after the FTX crisis. Okay, So at a similar depth to levels that we were at here, we are not seeing major bear market drawdowns. So we're not seeing really dramatic drawdowns in short-term holder MVRV. Okay, so again, unrealized losses by short-term holders, they're there, but they're not that bad. Now, it doesn't mean it won't get worse. I do still think September is going to suck for the most part, but you know, I think it will get worse before it gets better, but I don't think it's going to get that much worse. Okay, so there was something I wanted to show you here, which is so investor reactions. Assessing unrealized losses provides crucial insight into the pressure the market investors are experiencing. So we can supplement this analysis with volumes of profit and loss realized to better understand how these investors respond to this pressure. So there's a drastic decline following the $73,000 all-time high. So most coins that have been spent since this time have been in profit. Okay, so the investor is still doing, the average investor in Bitcoin is still doing quite well. And you don't have to look at this data down here to really see that. You can just see that this very steady, slow decline in Bitcoin price compared to the sharp declines that it's experienced in the past. Okay, and this is something I really want you to digest. The loss-taking events of our current market are nothing like the extreme levels that we saw during 2021 to 2022. But there is some fear that continues to creep into investor behavior patterns, which makes me think we're probably going to see some, probably another spike, another down. I've already talked about this in a previous video. I think the 42,000 to 46,000 price zone is likely to get hit, possibly as a final destination before we turn around bullish. I think I'll skip through this, but what I wanted to say, what I wanted to show you is that all of this data is what it's showing is that there is an expectation for heightened volatility, and this period is similar to the 2019 period. So what I'm saying is that we are very likely to see some more losses. We are likely to see some more fear in the market, probably throughout this month and maybe even into October a little bit. But I think, that should hopefully start to wrap up the long consolidation and bring us closer to the bull run. So navigating the cycle. During downtrends, patience and hodling naturally become a dominant market dynamic. A substantial amount of long-term holder coins were spent for profit into March, and that created a net supply overhang. And we'll take a look at kind of I'm going to do a look at the 2-week, what's it called, oscillator volume profile for MFI to kind of corroborate this. More recently, long-term holders have slowed down their profit taking and supply accumulated during the all-time high run-up, and they're gradually maturing into long-term holder status, which I believe is holding for I think 6 months or more. Okay, so you can see the long-term holder, short-term holder supply ratio is 5.3, and the ratio change over the past 30 days has been about a 19% increase. Okay, so that's a good thing. So what this says is that the wealth held by new demand investors has declined over recent months as coins mature and transition into long-term holder status. The percentage of wealth held by new investors did not reach the elevated limits experienced during previous all-time high distribution events. In fact, what we could say is that the 2024 peak in March, and I've already kind of mentioned this in my previous videos, is a lot more similar actually to the 2019 peak that ran to 14,000. It's just it's just hard. It's just harder to pull those kind of ROIs now, and so it doesn't take much, to move Bitcoin from 15,500 to 73,500. I mean, that wasn't even a 5x move off the bottom. So it's really not that impressive when you consider the history. Okay, so here's the HODL waves, and you can see we look much more similar to 2019 than we do to 2018 or 2021. So the question is, how long of an accumulation phase do we have to go through? I've gone on record saying I think we're going to see a nice pop up to about 90 to 110K by the end of this year, but that I feel that the biggest move for the bull run is going to actually come in 2025. That's sort of my theory. So would that be part of this 2019 zone? I guess that's up to your interpretation. So and this looks a lot like what Harris posted. So here you're having some corroboration. So to conclude our analysis, we shall consult a simplified framework for thinking about historic Bitcoin market cycles using key on-chain pricing levels. Deep bear market is where prices trade well below realized price. That was 2022. Early bull market prices trade between realized price and true market mean. And I would say that that's kind of what you know, um, we're kind of coming out of. Enthusiastic bull market prices trade between the all-time high and true market mean. So if this is meant to the upside, then I don't think we've really gotten there yet. Um, Oh, it says under this framework. Okay, so I think they mean the all-time high could be above it because when they say between, it's not really clear to me. So, okay, under this framework, price action remains within the enthusiastic bull market structure. Okay, so yeah, I mean this does correspond to what Harris is saying, maybe the long-term consolidation zone. What we're waiting on is the euphoric bull market, and this hasn't happened. What it says here, though, is in the event of a local downturn, the pricing level of 51K remains a critical area of interest that must be maintained for further price appreciation. So I still think Bitcoin could hit 42 to 46K, but most likely that's going to happen on a wick. As far as like a weekly close, I don't think we're going to have a weekly close between 42 and 46K. I think a weekly close is very likely to hit around 51K or 50K, somewhere in there. Okay, here's Bitcoin's realized price divided by true market mean by a cycle all-time high, and you can see it looks very, very much like we are in a period more similar to 2019 than we are to something like 2021. So the summary and conclusions, with Bitcoin residing only a mere 22% drawdown from its all-time high, which is considerably shallower than previous cycles. I mean, we've seen 40, 50%, 60% drawdowns if you go back in history. This is good for the Bitcoin investor. It's really starting to show that Bitcoin is becoming a more stable asset. But the short term holder cohort, which is behind most of the fear in the market right now, they're the ones at risk and they're the ones who are going to get hurt the hardest. So, alongside this, profit and loss taking activities are light. We've seen a downtick in volume, both sell and buy volume. And so, this is starting to bring us to sort of like the calm before the storm, which is, as Harris put it, this is sort of like the consolidation zone before your giant mania phase. So I thought this article was very interesting. I will link you to it in the video description so you can read it yourself and review the data, and it'll kind of help reassure you about where we're at right now. Okay, now the main TA that I want to show you is going to be TA that just corroborates what they were talking about in the article and also what Harris was talking about. So this is the ADX and DI viewed on a weekly time frame, and what you'll notice is that the average directional index or trend strength peaked out in March and then declined all the way back down to where it was in September and October of 2023. And so this is your chop zone, okay? And if you go back to 2019, you'll see that we had a chop zone that lasted for quite a while, right? You had this run up and then you had this very extended chop zone. Now, I don't think we're likely to see a chop zone quite that long. I think our chop zone is going to be shorter. We could look at previous chop zones like the 2015, 2016 consolidation phase. And, you can see what happens during a chop zone is that the ADX strength tends to range at fairly low levels, unlike mania, where it's at super high levels. And we did have a super high level occur in 2024, but it was relatively short lived. And now we're back down into a chop zone. So I imagine this chop zone could last for a little while. Okay, could last a little longer into, we could see this continue throughout quarter 4, even if it does turn more bullish, and even if Bitcoin were to go to like 90 to 100K and then pull back some, it would still probably put us in a chop zone. We're going to need to see much more explosive moves to like 150K to 200K next year, or even more than that if we make it all the way to the end of the year, which I have my own doubts about, but who knows. Then we could see much more explosive moves, right? We would expect to see this white start to curl around. So that's what you kind of want to look for, is when this starts to curl around. And it doesn't necessarily have to curl around and then just go straight up. It can curl around and kind of chop around for a little while. So that would be sort of my expectation, that it wouldn't just go straight up again. If you look at 2019, it did take a little while, right? We go back to the previous consolidation phase. Now, keep in mind, this was like right after a bear market. We had this gigantic pump, and then we came down to levels that look very similar to where we're at now in terms of ADX and DI. And it took months for us to see any kind of volatility pick up. And it really wasn't until the end of 2020 that we started to enter into that bull phase. So, I can't tell you how long it's going to take. I think we need a little bit more time, but I do think the worst of this consolidation phase for now, at least, is probably getting close to being over. I would anticipate within a month we'll probably see a reversal and some more upside price action, but I just don't think it's likely to be super violent upside action. Okay, I don't think we're going to 200K or anything like that at the end of this year. I do think there's a good chance we will break our previous all-time high set in April, though. I do think we will start to challenge that by the end of the year. Okay, so that's something I just want to say. And I think we'll also start to see the switch over to Ethereum and altcoin season, maybe the first of two. Who knows? As the ADX starts to pick up strength and Bitcoin maybe settles down somewhere higher than where it is now, and higher than the previous all-time high, which generally is a very good thing for altcoins and Ethereum. Okay, but we're not there yet. So another indicator I want to look at is the money flow index oscillator volume profile, and I want to look at this on a 2-week time frame and kind of see what it's saying in terms of our oversold and overbought conditions. And we can kind of look at some historical context as well. So I like looking at the oscillator volume profile trendoscope for MFI because it on the 2-week time frame it's a lot smoother. Okay, and you can kind of get a better idea of the trend. So you could see that we had sort of like this recovery phase that started, I mean, truly for MFI at least, it started actually in July of 2022, where the drops by Bitcoin became less violent each time, right? And then we sort of entered into this uptrend for MFI, right? And then we found ourselves peaking out in February. And again, this has more to do with like ROI than it does with the actual price that you have at the time, right? So change in price that matters, a ratio. And so now we're sort of in a downtrend, right? So we're going from this green line up here, which is overbought, down to the red line oversold. And we're actually getting near some pretty historic levels where we've seen bounces before. So if you were to draw another line, this is going to be a case of lines everywhere. Let's do a horizontal line. Okay, we'll draw it here. And I think I'm going to want to make that a little bit clearer. Okay, that's probably a little too difficult to read. I don't know. I do not want that red. Um, we'll just make it yellow. Okay. I mean, I got to use some kind of color, and I'll make it thick. All right. So this is kind of like if we want to match the levels from 2022, then we need a few more weeks to reach that level. This was also a significant level in 2018 in the bear market. So if you look at 2019, you can see from the bear market, we kind of flirted around here. We got up to, kind of similar to what happened this time. We got kind of to this like first peak and then trended down. Now, we only went down to like 42.26 during that consolidation phase. Okay, and then we resumed the consolidation phase before heading into mania. And so the drawdown here is a little more significant, but I think we're getting close to an end. Before what we do is we're going to, probably break through this trend line, back test it, and head higher. And this has kind of been the trend every single time if you go back in history. So this is suggesting to me that a reversal is brewing, probably at most another month or so away before we see Bitcoin price start to more reliably move towards the upside rather than downside. So it just may not move with extreme strength at first. I can't predict that for sure, but I think there'll be some bottoming process here, and then we'll head off probably sometime in mid-October, if I had to guess, where we'll start to see things look a lot more favorable than they do now. Again, I like to look at longer term trends when it comes to things like buy and sell. This is the Wyckoff buy and sell momentum indicator. We had our buying climax in February of 2024. We have not had a selling climax. As you can see, the buying volume just declined and declined. You've seen this with ETF inflows as well and increasing outflows. We currently have our lowest level on selling momentum, but I mean this is kind of the beginning of a 2-week period. So I think this is probably going to rise. I do expect Bitcoin to dump sometime within the next 2 weeks, probably take another leg down. So what I'm potentially looking for is a shift back to blue, because if we go back to 2019, you can see this was sort of your bear market sell off, and then you had this drawdown, and then you had your nice 2019 run, and things just kind of leveled off, and then you got a real dramatic sell. So we could see something like this. This was your COVID drop. We could see something like this, but I don't think we have to, right? Certainly in 2015 we had a few of these, but you don't have to see these before, and especially on the 2 week, before a bull market starts to commence. What you want to see is you want to see some declining sell volume, and that is exactly what we're seeing. And I think that that decline will continue, most likely. It's interesting because there was a decline. Oh, sorry, that was a bear market. Where's 2019? So yeah, in 2019 there was a decline. It was actually kind of steady of sell volume, and we had a little bit of buy volume, and then boom, floor fell out. And this was like, you know, some pretty wicked selling. And the question, would this have happened without COVID? I mean, that's an unknown question, right? Because we had an inverted yield curve back then, and the Fed lowering rates, and so it's a big question mark if that would have happened or not. So, could we see a red selling climax? It's possible. Okay, I'm not going to say it's not possible, but for now, we're just looking for this to decline. We're looking for some blue bars to show up to mark some kind of reversal, which I anticipate could happen as soon as next month. So I hope you can understand my bullishness that I have right now, that I don't believe that we're about to head into a nasty bear market or that we're even currently in one. In fact, if you look at the data, as I've shown you from all these different perspectives, how can you not see that we're in a consolidation phase? That's simply what it is. It's 2019 to 2020, 2015 to 2016. Call it what you want to call it. We're somewhere in a consolidation phase, and I think we still have a ways to go. And I believe that there will come a time, like I said, probably in quarter 4, where instead of it being a slow bleed downtrend consolidation phase, it turns into more of a slow uptrend consolidation phase. And I think a run to 90K or even 100K is still pretty slow when you consider ROI, right? That's not even a 2x from here. And I think we could probably have some trouble around $100,000 and chop some more, you know, before we really get explosive, likely sometime in 2025. I'm not prepared right now to do predictions and draw graphs for what's going to happen in 2025. I mean, I can for fun, and I have sort of like discussed some ideas on the channel, but I'm not going to take any of them seriously. I have to take things on a shorter time frame than that. But overall, I am bullish that the bull market is still here, and that we're in a loading zone. That's what a consolidation zone is. It's a loading zone. It's a chance for you to load up on Bitcoin, load up on altcoins, load up on Ethereum over the next few months before things get very explosive to the upside and we get into that phase of the market where it just seems like price will never come down, and you get these like very brief periods where you can actually like buy dips. That seems unthinkable at this point when like nearly everyone is tuned out of the market. And groups across the crypto simulation are just dead quiet. This is sort of like thought of sometimes as the crypto is dead phase of the market, but it very much isn't. I mean, it is and it isn't, right? So the right people like you are tuned in, and you're going to stay tuned in and educate yourself, and obtain positions, or strengthen your positions, whatever you want to do. Look for deals, load up. That's not financial advice. That's just the phase of the market that we're likely in. So thank you for joining me on this episode of Crypto Simulation Theory. Again, I'm Nagasi Snick. I'd love to have you come to my Telegram group to discuss these ideas more. So if you've seen this on this banner all stream long, join my free Telegram group. It's called the Snake Pit. There's a link in the video description down below. What do you think? Do you think we're in accumulation phase, or do you think we're in a different stage of the cycle? I'd be interested to hear your thoughts in the comments below. Remember to subscribe to my channel. Hit that notification bell if you want to be notified of future releases just like this one, if you enjoy this kind of content. Otherwise, I will see you again next time. Bye for now.